Welcome to FinTech Central, the channel at the intersection of artificial intelligence, finance, and technology. If you're into future-focused insights, smart investing, and cutting through the noise, you're in the right place. Today, we're diving into one of the most anticipated topics of 2025, altcoin opportunities. Bitcoin's halving is now in the rearview mirror. The ETH spot ETF is live. Inflation is stabilizing in many economies, and central banks are signaling a more balanced stance. This mix of factors is creating the perfect conditions for a new altcoin cycle, driven less by hype and more by fundamentals. But let's be clear, this video isn't about chasing meme coins or hoping for overnight moonshots. We're looking at real projects. Projects with proven use cases, committed dev teams, and growing ecosystems. So let's break down the top altcoin gems to watch in 2025, and why they actually matter. Let's kick it off with Ethereum, ETH. Yes, it's not a hidden gem, but ETH is still the backbone of decentralized finance and Web3. And this year, it's more than just a smart contract platform. It's becoming institutional-grade infrastructure. The ETH spot, ETF launched earlier this year, was a massive milestone. It opened the doors for pension funds, wealth managers, and institutions to gain exposure without touching an exchange. That legitimacy matters, and it's likely to drive sustained demand. At the same time, Ethereum's L2 ecosystem is booming. Arbitrum, Optimism, and ZK Sync are handling real transaction volume, and gas fees are becoming manageable. The merge to proof-of-stake, EIP 1559's burn mechanism, and consistent staking yields all contribute to ETH's appeal as a deflationary asset with passive income potential. With those fundamentals in place, and assuming market sentiment continues to thaw, Ethereum reaching the $4,000 to $5,000 range in 2025 isn't speculative. It's rational. Next up is Solana, SOL, the comeback story of the last 2 years. After getting crushed in 2022 due to its FTX exposure, most people wrote Solana off. But 2023 and 2024 were years of redemption. And in 2025, SOL is turning heads. Solana is one of the fastest chains in the market. Sub-second block times, dirt cheap fees, perfect conditions for high-volume applications like DeFi, NFTs, gaming, and even point-of-sale systems. Its partnership with Visa for stablecoin payments? Huge. That's not just a press release. It's a sign that TradFi sees Solana as a viable backbone for real-world financial infrastructure. Meanwhile, the Solana developer ecosystem is gaining traction. Projects like Helium, Render Network, and Jupiter are attracting users. If this trend continues, a $250 to $300 price target is well within reach. Now let's talk about Cardano, or ADA, a coin that's always sparked debate. Cardano's development has always been slow, methodical, and academic. Critics hate that. Supporters love it. But in 2025, that long-term vision is finally paying off. The Hydra scaling upgrade is live, Mithril is enabling faster light client verification, and the Plutus smart contract platform has matured significantly. The dApp ecosystem on Cardano is growing, not as fast as Ethereum or Solana, but it's picking up. More importantly, it's secure, peer-reviewed, and resilient. And in a world where security breaches are still rampant, that's a competitive edge. Macroeconomically, investors are showing a stronger preference for assets with long-term sustainability and transparent governance. Cardano fits that mold. If market sentiment continues shifting toward fundamentals, a price of $1.50 to $2 is achievable and may even be conservative. Let's move on to XRP. This coin has been through legal war zones over the past few years, but 2025 marks a new chapter. Ripple has largely put the SEC saga behind it. That alone is a win. But more importantly, XRP's core use case, cross-border payments, is back in the spotlight. Why? Because traditional payment rails are still painfully slow and expensive. RippleNet offers real-time settlement, lower fees, and integration potential with central bank digital currencies. The recent announcement of Ripple's stablecoin initiative only strengthens the infrastructure thesis. XRP isn't trying to replace money. It's trying to power the rails that move it globally. Historically, XRP lags during the early phases of bull markets and then surges quickly. If we see increased institutional participation in blockchain-based finance, XRP reaching $1.20 and $1.50 seems realistic. Now, here's a quiet powerhouse, Chainlink, or Link. If you're not deep in the crypto world, you might not realize how essential Chainlink is. Without it, DeFi wouldn't work. Smart contracts wouldn't know the price of ETF, the weather, or any off-chain data. Chainlink provides oracles, secure, decentralized bridges between blockchain and real-world data. But now, it's doing more than that. The Cross-Chain Interoperability Protocol, or CCIP, is positioning Chainlink as a backbone of multi-chain interoperability. That means blockchains will talk to each other securely using Chainlink. As tokenized assets, like stocks, bonds, and real estate, become more common on-chain, demand for secure data feeds and messaging will skyrocket. Chainlink is years ahead of any competitor in that space. Historically underpriced, Link hitting $35 to $50 isn't a moonshot. It's overdue recognition for the infrastructure it's quietly powering behind the scenes. Bonus time. Let's talk Arbitrum, or ARB. Arbitrum is one of the most widely used Ethereum Layer 2s. It's already captured serious DeFi volume and has one of the highest TVLs among rollups. What's exciting in 2025 is that Arbitrum's DAO is actively deploying capital to grow the ecosystem. That means more incentives, more devs, and more apps. As Ethereum scales, L2s like Arbitrum will scale alongside it. And with ZK rollups still working through user adoption hurdles, optimistic rollups like Arbitrum have a short-term advantage. With the right conditions, strong Ethereum performance, higher gas prices, and continued dev activity, Arbitrum could easily hit $3 to $5 this year. So here's the bottom line. Crypto in 2025 isn't about hype anymore. It's about infrastructure. The market is maturing. Institutions are playing the long game. Retail investors are smarter. And the projects that stand out are the ones building the foundation for the next decade of digital finance. Ethereum, Solana, Cardano, XRP, Chainlink, Arbitrum. Each one of these isn't just a token, they're ecosystems, with clear missions, real adoption, and room to grow. And remember, this isn't financial advice. Always do your own research. Diversify. Stay informed. Think long-term. If this breakdown helped you out, hit that like button. Subscribe to FinTech Central, and ring the bell so you don't miss what's next. Because in the upcoming video, we're diving deeper into realistic price predictions and breakout metrics you should be watching. This is FinTech Central. Thanks for watching, and I'll see you in the next one.